All right, so step one, let's review and realign your goals. Now, a few videos ago, I showed you this graphic from the three-factor alignment. Goals is one of three factors, but goals is the most important because that is our North Star. We're investing in real estate to help us get to our goals and achieve that lifestyle, achieve that desired outcome we want. So what are my goals? My goal is to get to $20,000 a month in cash flow from real estate. Not stocks, not other businesses, not bonds. I want $20,000 a month in cash flow from real estate. Now, I'm still in the accumulation phase, meaning I need more assets. I need more rental properties to go out there and achieve the goal. So I'm in a growth phase, not income phase. Once I get to $20,000 a month, I'll be in the income phase of my real estate investing. Now, a little bit more about me to give you the context as I talk about some items in this portfolio analysis video is that I am very busy. I have two young girls. I run a couple businesses, and I'm a very busy person, like many of you out there are as well. I would say my risk tolerance is medium to high, and this brings up the question of how do you go out there and define risk tolerance in real estate investing. Well, part of it is you as an individual. Like if you do a move or if you have a certain amount of debt or high interest rate, are you losing sleep over it? Is it causing arguments with you and your partner or spouse? If it is, it's probably not worth it. So there's a lot of ways that we can define risk tolerance. But from a number standpoint, personally, like I am very, very comfortable with high leverage, but I offset that leverage by having high cash reserves. Remember, it's a matter of when, not if, something goes wrong in real estate, whether it's a market correction or a tenant does something to a property or you just get some bad luck on things. So I've always taken the view that if I have high cash reserves, I can ride out those bad times. Because if I can hold on to my properties over 30 years, I'm going to be a very wealthy person achieving my goals. But if I lose my properties in year 3, well, I've got some issues going on. And so again, remember, it's a matter of when, not if, and be prepared, because I've learned this from previous market cycles when I was in my 20s. Don't just be ready for like one or two punches. Be ready for a couple punches to the chest, then a couple punches to the face, and then getting kicked once or twice while you're down. Well, if you can go through that, get back up, you should be good to go. So that's my metaphor, because often when bad things happen, they don't come in one, they come in waves. So be prepared for that. And from a macro perspective, I've learned over the years, again, this going back to like my days when I was trying to do stock investing and foreign currency investing and day trading, I am really, really bad at timing the market. And that's in stocks, that's in bonds, that's in currency trading, and that's also in real estate. So I don't try to time the market. I don't think I'm smarter than the market. Actually, I know I'm not smarter than the market, but I very much have a dollar cost averaging mindset, which means that when I have enough capital, I go out there and I invest in the best rental property or the best real estate investment that I can at the time, given the current market conditions. Now, 99% of the time, that is my attitude. Of course, there's that 1%. If there's something crazy going on in the world or I have something crazy going on in my life, I will definitely hold. But I generally go out there and invest. When I have enough capital, I will go out there and invest. And last but not least, I am not a real estate operator. I'm not going to go out there and knock on 300 doors to find one property to go out there and then rehab it myself or run a general contracting crew. It's not my skill set, it's not my strength, and it doesn't bring me pleasure. But looking at deals, finding deals, writing some of the bigger trends, that's definitely my speed and my strength. So I focus on that. Again, not right or wrong. I'm just playing to what my interests are, and also just being very practical that I don't have the time to go out there and spend 30 or 20 or 30 hours a week to go out there and spend a lot of time in being an active landlord. Probably like a lot of you watching this video, I can spend a couple hours here and there as needed. So I definitely look at this much more from a finance perspective and hey, how can I achieve my goals in a 10 to 20 year time frame? All right, so we'll start moving to Property Llama now. And the first thing when it comes to goals is you gotta make sure you define them, come back, reevaluate them based on where you are in life. Families change, you have kids, all this stuff that, life happens. You have to go back there and review and realign it. Now, when I look at my goals, I have two very simple questions to ask myself. The first one is my current cash flow equal to or greater than my cash flow goal? If it is, great. If it's not, I need to go out there and get more cash flow. The second thing I look at is is my net operating income, aka the cash flow I have once the properties are paid off with no mortgage debt, is it equal to or greater than my cash flow goal? So coming over here to Property Llama, and I've got a portfolio loaded here. And this is not my exact portfolio. I pulled a few properties from my portfolio, but I also pulled a couple other ones as well to give a very good sample of a lot of the common properties and scenarios I currently see out there between clients and the market condition. So again, my two goals out here. My cash flow is $26,000 equal to or greater than $240,000 a year? No, it's not. All right, let's go over to my net operating income. Is $90,000 equal to or greater than $240,000? No, it's not. So therefore, if I want to achieve my goal of $20,000 a month in cash flow, I need more cash flow. I need more net operating income. I need more assets. Therefore, I am still in the growth phase of my portfolio or of my real estate investing career. And many people watching this and many of the clients I talk to, I'd say the vast majority are still in that growth or accumulation phase as well. And that's why I picked this portfolio to model. And then, oh yeah, last but not least, make sure that your goals here in Property Llama are up to speed, because as we do some modeling and that what if scenario, this will actually come in very handy. So get your goals updated by going to My Profile. And then you can scroll down here and edit these goals. If you don't know, like a valuation goal or net worth goal, don't worry about it. The annual cash flow goal and the net operating income goals are the most important. Do the best you can elsewhere.